Hello everyone and welcome to another of our Trader Talks videos where I speak to Steve Miley, the Market Chartist. Hello Steve.
Hi there, Richard. All well?
Yeah, good. We've got a crucial Fed meeting I think this week. I think that's going to really impact the markets because I really do see that this risk recovery has come to a really important inflection point, and I think the Fed could be tipping the balance. We're going to start off this week looking at your chart, which is the S&P 500 futures.
Yeah, so we're kicking off here with the S&P 500, and you're right, Richard. We had some wobbles yesterday on some of the riskier assets, which we're going to come to a little bit more detail when we look at Aussie yen with yourself. But if we start here with the S&P 500, what you're really seeing is this really strong acceleration in June, rallying away from the uptrend line that comes from March, an accelerated rally from May through into the early part of June, and again to kick off this week. But then yesterday, a wobble, but the wobble with the S&P was basically effectively like an inside day pattern. It was a
Do you think
sideways.
it can continue, Steve?
Yeah, well, it's very sideways, but yesterday. So it looks, if you just looked at the chart in here, you'd say, well, it's a bit overbought, right? The RSI is stretched, but I mean, it's not ridiculously stretched. So yeah, I would say there is still further upside. And for me, we've got that gap now, the gap up from February in the 33.06, 33.33 area, and then the all-time high, 33.97. So there's all the threat up there.
Well, you've got the, NASDAQ has hit its all-time high, and certainly Wall Street indices look as though they're all very positively set up and ready to continue higher. And again, I just think that the Fed could be a bit of a key moment here. Maybe not so much for equity markets, but I think looking further out, I think we could see key changes. But certainly for the S&P 500, still remains strong, doesn't it? It just doesn't really want to go down. It could have gone down yesterday. It really sort of started to look at building support. The futures are higher again today. It doesn't really look as though it necessarily wants to correct back yet. And I think that the support continues to come in for weakness for these equities.
Yeah. So yeah, any dips are being bought, and as you mentioned, the Nasdaq, an all-time high at the end of last week, another new high through this psychological 10,000 level over the past 24 hours. So the tech area leading stocks higher in here, and all looking very, very bullish. But as you say, Fed are going to be key, and any kind of wobble, from the Fed, any kind of step away from ultra dovish position could be key. And really, we've seen that over the last 24 hours, the potential wobble that we could see more of on the FX markets. And I know you're looking at Aussie yen.
Yeah, I think Aussie yen is, I always like to use it as a key gauge of risk appetite generally. I think because you've got the ultra safe haven yen and certainly amongst the forex majors, the Aussie, which is considered to be one of the most risk-on currencies. So you have that pair or that cross that really does, I think, guide whether you've got risk on or risk off in markets. And I think what we've seen is that obviously the Aussie yen has been bursting higher throughout the course of this rally. You could certainly argue it sort of almost tracks that S&P 500 higher. But it's signs of a little bit of a wobble now. We've seen the yen starting to strengthen in the last couple of days. The Aussie's also been under a little bit of pressure, and we've seen Aussie yen pulling back. Key support now around that 74.47 mark, 74.50. That was the old February high. It also coincides with the top side support of the old uptrend channel that we've got drawn in. So this is a really important level, 74.50. If that is broken on a closing basis, and I think that if that is seen today in the wake of the Fed, we could start to see this risk rally just coming over. And I think this is going to be a key chart, which really does imply whether that risk retreat is going to be on. Because if you see that support line broken, 74.50, completes a little top pattern, 250 to the downside, brings you back to sort of 225 actually downside to towards 72.25.
Yeah,
I think it's an important, really important pivot point that, and we could see it tested if the Fed, as you say, if the Fed even remotely starts to hint that it's not going to be as dovish as it has been or has hinted at being, we could see the risk rally coming into some profit taking.
Yeah, and I'd agree there. I think there's two trades in there really. You've got you can short it, right? If it does break down, if you see the breakdown, you can short it. Or if you're intermediate term player, though, you've got a slightly longer term view. You're then waiting to buy into that because the bigger picture uptrend's still intact, right? So there's kind of
I think it's just a near term move if it does break to the downside. I still think that the risk recovery is still on because you've got such dovish monetary policy still around the world. Even if the Fed steps back a little bit from that, you've still got some continuation of the dovish moves. See the ECB last week. So I think that it's going to be a near-term correction, but it would be a buying opportunity ultimately.
Yeah. And I think one final thing we should mention is the fact that, what's the trigger for the Fed? Well, clearly the trigger for the Fed is going to be the potential from the fact that we had that outstanding, amazing employment report, right? Yeah. So if the Fed's got a reason
how does that change the Fed's outlook, really? I mean, we've got the projections today. Does that really play into that and they start to improve the projections? Do the market start to think, well, the Fed isn't going to be as dovish as we thought it was previously? So it gives them an excuse to take profits potentially.
Yeah, agreed. So a real turning point and a key moment we're at here for at least for the next few days, right? On the result of this Fed, and you've got the potential triggers. We've looked at the triggers there on Aussie yen, potential upside on the stock indices. We see the triggers there as well on the potential targets. So it's
interesting moves. Interesting moves.
Yeah. Excellent.
Yeah. Well, thanks a lot, Steve. Again, we're more chatting next week. I'm sure we'll find some more trades for all you traders out there. Thank you very much, Steve, and we'll speak to you soon.
Thanks, Richard.